Like a lot of people, I think when I was younger, collected cards. I would buy packs, and I had binders filled with different baseball and basketball cards, and I had not thought of these cards in 15 or 20 years. I assumed as the internet came along and people got interested in other things that these had fallen out of favor, much like Beanie Babies and Pokemon and all sorts of interests of youth.
All through the colorful pages of Zubaz.
But then I started digging around and I saw that the market, not just for trading cards, but all those things had begun to explode.
5 grown men were fighting over trading cards outside the Brookfield Target.
Really, over the last year and a half, 2 years, the value of this stuff has been skyrocketing.
When players got hot before, their prices will take a spike. But this was happening in every sport, and the percentages were insane. Like, never seen before.
I have customers that used to hide their sports cards. Girlfriend comes and like, you don't know they collect cards. But now it's cool.
Entertainers are collecting cards. People are filming it, and they're getting thousands of people, like the video gamers, watching them play games.
Chansey, y'all got a Chansey! Oh, snap!
We're now cool.
The boom in the value of trading cards, I think, has its roots in the Great Recession in 2007, 2008, where you saw a lot of people lose a lot of money.
It was the worst day on Wall Street since the crash of 1987.
You saw investors start to look into alternative asset classes, other places to put their money so that they could diversify, not be too susceptible to crashes in the market, that sorts of thing, which is why you've seen money flood into everything from sneakers to music copyrights, NFTs, these non-fungible tokens, Pokemon cards, Beanie Babies, trading cards, all these other places where people can invest because they believe that they're going to appreciate with time. I decided to start figuring out what was going on. The more I dug around, I was really drawn to this one guy, Ken Goldin.
I am Ken Goldin, and I am the founder and executive chairman of Goldin Auctions.
He's just a character. Talks a million miles a minute. He knows everything and everyone.
If I want to go send out an email, I can reach 500,000 people at a touch of a button.
He loves to kind of show off how much he knows. He goes live on Instagram all the time to do what's called a break with his son, where you open up a pack of cards.
We are back. Okay, roll. 25,000 no bids for an ultra rare Kobe Bryant 1 of 1. This is 1951 rookie card of Mickey Mantle. Let me repeat that.
Ken Goldin is one of a handful of people who have lived and breathed the sports collectibles market for 40 or 50 years.
I've been doing this since 1978. Okay, literally buying and selling since I was 12 years old.
Less than 50 of these exist in the world. The holy grail of baseball cards. The T206 Honus Wagner.
He's done more press around trading cards than just about anyone.
I got the idea of doing a major Babe Ruth auction, so I contacted the Babe Ruth Birthplace Museum, and we came up with a deal.
For about 20 years, I went on networks, including the most famous one, QVC Network.
I found that this is nuts.
And when I sold product, I was literally the expert that went on and spoke about the product.
Ken Goldin, CEO of Scoreboard, are you with us?
I am, and we're ready to go on this one.
Came up with the idea for Goldin Auctions really in early 2000. I had always been doing things in the trading card industry and the collectible industry, from owning a card manufacturer to selling sports collectibles.
Goldin Auctions was a second or third tier auction house behind some of the biggest dogs like Heritage Auctions. But he made a decision a few years ago to really focus on contemporary cards and on cards outside of baseball to fish elsewhere.
In trading cards, you've got two different markets. You've got vintage and you've got modern. When I was a kid and collected cards, all people cared about was the vintage cards. They wanted Ty Cobb, they wanted Babe Ruth, they wanted Mickey Mantle. Nowadays, people collecting are much younger, and what they want is the cards of the players that they're watching today. There was something going on, and I really threw myself into the modern market. We were lucky enough to get a collection in 2019 that we started selling of some very rare basketball cards. I probably got the better end of the deal with a card called a Logo Man with LeBron James and Michael Jordan. I privately sold that card for $900,000, which broke the record not only for the highest priced modern card of all time, but the highest priced basketball card of all time. I think it really lit a fire.
Here we go!
Hello, sports card investors, and welcome back to the show floor of the National Sports Collectors Convention 2021.
The buzz in this room is tremendous. I've been coming to these shows for more than 15 years, and this is unlike anything I've ever seen.
This is off the charts. Traffic, 2-3x sales for the first 2 days.
Every day getting progressively busier. It's a sign of how healthy the hobby is.
So some of the cards that have set records in the past year or two include rookie cards for Giannis Antetokounmpo, the Milwaukee Bucks forward, LeBron James, Kobe Bryant, Luka Doncic.
When players got hot before, their prices doubled, which is normal. A guy comes up from the minor league or a player scores 62 points in a game, you know, their prices will take a spike. But this was happening in every sport, and the percentages were insane, like never seen before.
For example, a Michael Jordan rookie card that was $25,000 in 2019 was $40,000 in March 2020, and then within 2 months it hit $100,000 for the first time ever. And then it came back down, and then it went all the way up to hitting $700,000 at our auction.
We remembered selling Luka Doncic in the last Nationals for $77. By the time we got back and we did the next show, they were $300. The prices went up to $1,500 to then $3,000. That was when we're like, we're gonna sell.
The valuations of all these go through the roof in kind of a 12 to 18 month span. During the pandemic, like the 8 highest selling cards of all time all happened. If you go all the way back, trading cards started as inserts in other things. They were sort of a means of marketing. The tobacco companies put trading cards in cigarette packages. Then in the 50s, Topps puts trading cards in gum and other candy. That becomes so successful that they become primarily a trading card company.
Then all of a sudden in the late 1980s, starting in really 1987 and 88, you know, it was crazy.
Topps, Donruss, Fleer, Score, the names go on.
Then Upper Deck came in, and in 1989, Upper Deck came out with a product that revolutionized the industry, and it had card number 1 as Ken Griffey Jr.
There it is. Wow.
You know, everyone thought it was limited, but what they didn't realize was Upper Deck kept printing and printing and printing. The card manufacturers had the mistaken thought that they were making a commodity, and they started treating it like a commodity. So what they would do is produce to order. If they had 2 billion cards ordered, they literally would create 2 billion cards, not thinking that if they create so much product and the product goes stale, the price is gonna go down. You know, here comes 1994, and then all of a sudden, it's a baseball strike.
World wars and acts of God couldn't do to baseball what 28 owners and 700 players have done. They killed off the balance of the season.
Everybody stopped buying cards. Hundreds of millions of dollars of cards started getting returned to all the manufacturers.
That glut of supply led to kind of a crash in prices.
In the late 1990s, luckily, there was a rebirth.
Most of the major sports leagues set up exclusive deals with one manufacturer, and that manufacturer is intentionally controlling supply so that that does not happen again.
They started using insert cards and chase cards, you know, kind of like golden tickets.
That is a,
They know that the contemporary collector wants something unique, privileged scarcity. They will create a one-of-one card. Or they will create a limited set of 10 cards because they know that the interest for that will be so great.
You literally can spend $5 on a pack and pull out something that's literally worth $1 million.
Oh my God, oh my God.
I think that they have it down to a better science, and the risk is more spread out over a number of products, that if they realize they laid an egg with one product, you know, with overproducing, they can immediately compensate and react to ensure that that does not happen in future products. The second anything goes on the shelves of any of the major retail locations, it's gone.
I got there pretty much right when they opened. I was the first one in line.
As long as that keeps happening, we're in good shape. When you look at the landscape today, Topps has the exclusive license for Major League Baseball properties. Upper Deck has the exclusive license for the NHL, but Panini has a baseball license with the Players Association, and they have the exclusive NFL and NBA license. And the growth of the market over the past 10 years has really been in basketball more than any other sport because of the international nature of basketball. So Panini, with the lockdown on that, they took the architecture of most of their products from an Upper Deck product that was produced starting in 2003 called Exquisite. You know, they came out with a card called a Logo Man, where they took the NBA Logo Man patch off a uniform and put it on a card, and they only made one card. For example, the LeBron James Ultimate Logo Man, which is like the most sought after rookie of LeBron James, 1 of 1, we just appraised it for somebody for $15 million. $15 million for a card produced in 2003. They also came up with something called the Rookie Patch Autograph, where they made a trading card, and then they took a patch of his game-used jerseys, they put it on 99 different cards, and then they had the player sign it.
I think it's a lot of things coming together. With PSA, with grading, it brought a big audience more than before.
Grading is basically our authentication system and way of putting a set value on a card based on the condition.
My name is Steve Sloan. I'm the president of PSA, which stands for Professional Sports Authenticator. We authenticate sports memorabilia and collectibles, specifically trading cards is our largest category. And that spans the world of vintage baseball cards to ultra-modern basketball cards, in addition to TCG cards like Pokemon, Yu-Gi-Oh!, Magic the Gathering. Being the first company to offer third-party authentication and grading, the industry has really gathered around our standards.
So the 4 categories for grading is centering, which help, best conditions basically 50-50. And then the surface, if you have any dents, scratches, those are the 2 things you look for. The corners, if it's dull or sharp or rounded, those are the categories. Edge is basically if there's any lines and any issue with the edge of the card. PSA is basically grading your card. If you have a $500 Jordan rookie before, now it's obviously a lot more. If you get it in top condition, it becomes a gem mint basically. And now our PSA 10 just sold for $840,000. And that's a big game changer.
While we're handling cardboard and not precious stones or gems, it is the same type of mentality for the people who have submitted them to us. This is a priceless item to someone out there, whether it's a family heirloom or a recent purchase that's gotten them really excited in the space. So, the time taken by PSA to grade is a really important part of the overall industry.
There's high demands on rare cards, but not everyone could afford those rare cards.
One thing we saw that came into the marketplace really in 2019 is these fractionalized share companies.
Fractional ownership, at least as it pertains to trading cards, is a relatively new concept that only became possible a few years ago. The way that it works is that Mythic Markets or any other fractional company acquires a physical asset, let's say a Black Lotus, which is a Magic card. We create a company, Black Lotus LLC, for instance, that exists solely to own that card. That company is what is being broken up into shares, securitized, and then an IPO is held for people to invest in shares of that company. And then we open up a secondary trading market where shares of that can be traded between investors. Effectively, it is no different than investing in your favorite traditional stock in the stock market, Apple, Google, Microsoft, Facebook, whatever. Technically, you're not investing in the card itself, for instance. What you're investing in is a company that exists solely to own that one thing, that one card. For the people who love this stuff, but don't have $1 million to plant into a single card, for instance, this is a great way to invest in the things they love, something that they have intimate knowledge of that may be an advantage over those that don't have that same knowledge. It has, especially over the last 18 months, outperformed the market and gold and real estate and other alternative assets that they could otherwise invest in or broadly available to investors.
The market won't always be a rocket ship, so you also look to diversify. We've just recently announced that we are launching our first ever comic book, video game, and TCG, trading card games like Pokemon, Yu-Gi-Oh, Magic the Gathering, and so on.
The rapid surge in prices definitely leveled off in the past few months. What we don't know is whether this is a bubble that will slowly deflate and it's a sort of a passing enthusiasm, or whether this is, as most of the people in the industry would hope, sort of a new asset class, and the prices will just fluctuate much like stocks fluctuate.
Inflation is becoming more apparent, and people need to get out of cash in order to get into some alternative asset. This market is in its early innings and is only going to get bigger.